Hey, what's up, my friend? So today we have Shay AKA Humbled Trader on the show. So what's interesting about Shay is that she started YouTube as a passion project, and fast forward to today, her channel has amassed more than 1 million subscribers. And as you know, right, she's in the trading niche, and in the trading niche, right, out of 100 traders, 95 of them are pretty much male. So she's kind of like the minority in a male dominant niche. Wow. And definitely, right, seeing her grow, right, has been a very inspiring experience for me as well, right? Seeing her from growing a small channel to where she is today. So this goes to show, right, that sometimes all you need is to just take a baby step forward, because you never know where that step could lead you. Yeah. So if you want to connect with Humbled Trader, I'll put her social media profile in the description below. Nowadays, there's a lot of scam and imposters, so the official ones are in the description below. And moving on in today's conversation, right, we covered a few things. Number one, we talked about Shay's trading approach and how it has evolved over the years. She also talks about her favorite swing trading setup. What are the things she looks for? The entry, the stops, the targets. And this time around, we have chart examples as well. Yeah. And also we talk about YouTube, right? How she got started in YouTube, why she got started, her strategy to creating content, how she conducts awesome trading interviews, which I myself have learned a lot from her. And finally, we talk about her entrepreneurship journey so far. What are some of the struggles, the lessons that she has learned along the way? So all this and more in today's episode. Sounds good? Then go listen to it right now. Okay, right. Shay, welcome to the show.
Hey Rayner, thanks for having me. It's been a couple years since we last connected.
I think it's been like more than a couple of years since. I think way before COVID, right, where you were a speaker on Traders Fairs, right? And I think not many
Yes.
people were aware of that one because the event is no longer running. But thank you, right, for being back here once again, right, to share your wisdom and insights, Shay.
Yeah, I see you a lot on YouTube, or I think we've been missing you on YouTube lately, but it's for good reasons.
Okay, so to kick things off, Shay, I think we will try to go with a different approach. Let's first talk about YouTube first, right? And then later we get into trading and your journey. So moving on, let's talk about trading, right? So let's kick things off and talk about how has your trading evolved throughout the years.
Oh yeah, I think the last time we talked during Trader Fest, that was during the time where I was doing a lot of small caps, like small cap stocks below $5, below a billion market cap with like really low float. So I trade less of the small caps now. I would say since 2021, near the later half 2021, I've gradually transitioned to trading more larger cap stocks. Especially when the meme stocks were like running around, they were all technically those stocks were technically all larger cap stocks. So I think that's when the transition started. I realized that hey, you can make money, if not more money, on these larger cap stocks with lower risk, because the small caps are just way like the risk tolerance I used to be able to take, but I don't like the volatility in my P&L anymore from trading small caps. Like I used to be up 20 grand, down 20 grand, or down 30 grand and up 10 grand, like in the same day, trading those small caps. And I just don't want to do that anymore. So I transitioned to larger cap stocks. I would say my style is still very similar as before for the large caps. I still trade a lot of momentum, overnight gap ups and gap downs. And large caps nowadays, I trade a lot more like trend joining setups. So instead of entering in and out like 3-4 times, I'll enter one time and I'll let it ride for the next couple of hours or even a couple of days or weeks. So yes, besides day trading, I'm doing a lot more swing trading this year on the large cap stocks. Essentially, all the changes in the last couple of years has been all surrounding about how do I trade less and make more money. So that's been my goal, because I realized that just from reviewing my trades in 2020, 2021, and 2022, I was just trading so much volume and too much transactions. The fees and the profit and loss kind of just ate everything up. in which, yes, I was still profitable, but if I think about all the number of trades I've taken, I don't think it was worth it. I just thought like there was a more better optimized way to trade. And that's what I'm really trying to do this year. I did a video, was it 2 weeks? 2 weeks ago, kind of reviewing my performance so far this year. And in that video, I realized, while making that video, 50% of my profit on the year is from one single trade. And it's from a day trade that I held a swing trade that I held for 2 weeks. So that just really shows that less is more in trading. You can trade less. I know traders who trade like twice a year, but when they do trade, they are like making like 6 figures, 7 figures. So I'm not there yet. But from just my performance this year, I feel like I'm getting closer and closer every single month. So I'm really trying to trade a lot less and then make more money by sizing in more to the best setups and ignoring everything else that's not great, or the probability is low or the liquidity is low. So that's just where I'm currently at. By no means am I perfect, but I feel like I'm making a lot of progress this year to eventually get to where I want to be in terms of trading.
So you mentioned that there are traders who takes 2 trades a year, and could you maybe just walk me through like how does that work? Like just 2 trades a year and they do well. Like, yeah, I'm just curious about that part.
Yeah, so I know some small cap short sellers who only short, and because they only trade on the short side, they'll only short whenever there's like we call them like sector moves or like parabolic moves on these small cap stocks, in which maybe it started at from 50 cents, and then over the course of 2 weeks it went up from 50 cents to $5 or $10. So in the candlestick chart on the daily, you just see them kind of like green candles slowly break out every single day. And eventually the candles get so extended. A good example that viewers can look up right now is TIL. That's a small cap stock. Again, I don't have positions in that stock. Do not buy or sell that stock because I'm mentioning it. This is just an example of what that setup is. So those traders who only trade once or twice a year, they'll only scan and wait for that specific setup, because it doesn't show up every day. It literally shows up twice a year or 3 times a year. So when they do find it, they are only going to size into those setup. So for that one, for example, they'll short the first red day on that very extended stock, and they'll essentially they, instead of shorting like 1,000 shares, they'll short like 20,000, 30,000, 50,000. So that stock, TIL, for example, it's red, right? From $60, it's probably going down to $20. So they are making 40 points on whatever share size they have. So that's how they can only afford to only trade twice a year, because they're trading with more size, and they're trading their best setup. That will be the setup that's like their 90% win rate with the best profit factor. So that's the time to size up. But again, that setup may not be the best for everyone, but it's the best for them.
And I believe that it took them many years, right, to get to that level where that just the 2-3 setups a year it's enough. I'm pretty sure they have been through hell, right, and then to realize, okay, this is just for me the best right now, and I'm just going to stick to it, right? Because nobody is like just start off trade 3 times a year. I think no traders want to do that. They want action. They want to click and buy and sell all the time, not just wait for a setup for half a year or for one setup.
Right. No, yeah, exactly. Yeah. Usually it's the very experienced traders who start realizing that. Usually probably like after year 5 or year 10, that's some of the biggest traders I know. Like, they trade, twice or 3 times a year, but it's only after 8 years that they realize they can do that.
So could you walk me through then, what are some of the things you look for before you put on a trade?
Yeah. So I'll just talk about the way I trade now, because I think it's very different than how I trade a couple years ago. So nowadays, I care the most about the actual chart. For example, if I'm trying to take a trade a day trade and want to turn into a swing trade, the chart has to be like a multi-month breakout. Sounds easy, but it's not, because it doesn't show up every single day. So nowadays I've been waiting, sometimes I'll take 2 swing trades a month, which is already a lot for swing trades. But from where I came from years ago, 2 trades will be what I do in like 2 hours. So so nowadays I'm looking for stocks specifically that have a range breakout. So like I call that a daily key level breakout. Some people call range breakout, but essentially you're breaking above a specific resistance that it's been holding under for multiple months. So that's also the multi-month breakout. So I will take those stocks for on the long side. And I love it when it's also paired with some very, very fundamentally positive catalyst. An example would be, for example, Palantir. That's a stock I'm currently swing trading right now. When they had a multi-month breakout, if you look at, if the viewers pull up the chart, on the day it gapped up above, I think like multi-month breakout was 35 or 34.80, something like that. That was also the day they had the news that they are going to be included in the S&P 500. So for me, that is something fundamentally changing for the company, right? The moment you're included in the S&P 500, more funds can invest in you. You're included in a lot of major ETFs, and there's just a lot more legitimacy for your company after you're being included in the 500 of the biggest company in America. So that's definitely another thing. So I want to see very, very positive fundamental catalysts along with like the technical breakout. So those will be the kind of swing trades I will take for, I'll take it for like a month or two, and I'll take a little bit more size on those kind of trades.
And what if, let's say, there's a breakout, but there's no news catalyst, or maybe the catalyst doesn't meet your requirement? Do you still take the breakout?
Yes, I'll still take it, but for example, let's say for the previous setup I just talked about, let's say I'll risk, $5,000. Then for the ones with no fundamental catalyst, I'll still take them if the chart is clean, like still a multi-month breakout, but I'll put less money in it. So instead of risking 5,000, I might just risk 2,000 or 1,000. So the risk allocation is definitely different.
So there's some kind of like a checklist to say that, if there's catalyst that you approve, right, you risk X amount. If there isn't, or catalyst that you think is not important, then the size gets reduced by a certain percentage.
Yes. I should say, like, for almost all the, basic, or I shouldn't call basic, like most of my trades are gonna be those ones where I only risk 1,000. When I see a very, very good setup, then I'll take maybe 5x the risk, or 2x, 2, 3, 5, 4, 5x. I think that's a better way to put it. Like the best setups, you want to size up more. Anything else, maybe risk like your normal amount.
Then this leads me to the next question, because let's say there's a better setup that comes along, you risk 3 times your usual risk, and let's say it turns out to be a loser, then the loser will be 3 times larger than normal. Yes. And then you have to kind of like climb up your way out that so-called hole that you've dug, right? Like 3 times more effort because of the larger size that you take on earlier. So what's your take on that?
Yeah, that's part of the game. And granted, like the reason you pick that A+ setup to risk more in the first place, that's not random. Like that should be the setup you kind of tracked in the past. For example, I journal a lot all my trades, so I know I categorize my trades. So I know, historically speaking, the way I've been trading for the last 2 years or 3 years, this setup, when it shows up, I tend to make a lot more than others, or my win rate is a lot more than others. So I'm not sizing up on that setup for no reason. I'm sizing up because I have historical data and performance from myself, knowing that this is the time to maximize instead of risking a normal $1,000. So there needs to be basis for why you choose to size up for that specific setup. And it's only after you have those bases, you have those journaling and track record for yourself to review, then you can see with like reasonable what's the best way to say it, with reasonable effort and probability that if that setup shows up again, it's probably worth it to risk more. Even though knowing, like, to risk more to make, let's say, 5x more, even knowing that if you lose 3x more than normal. But overall, it should still be worth it. But obviously, if your that A plus setup shows up every single day, then maybe that's not an A plus setup, right? It should be a setup that shows up every couple of months or every couple of weeks. It shouldn't be every day.
Okay. Could you maybe just walk me through, since I'm the only one speaking to you, like an A plus setup, where where do you look for an entry point, your stops, and maybe even targets, right, for that setup?
Yeah. So, for example, the Palantir example I gave, when it broke out of the multi-month breakout with a catalyst, let's say, I think I said the key level was $35. So I'll use that around that level as my entry. And I'll, like, since it is a swing trade, I'll use a little bit more risk. So I'll probably risk $2 per share. But upside, I want to see that has upside to do, at least 2x or 3x. So if my risk is $2 per share, I want to know it has upside for $6 per share. So if the viewers look at the chart right now, they would see that Palantir did have all-time highs, I think around like $45 or $50 during the pandemic era. So that's the potential upside. Very realistic upside, in my opinion, for the stock to go. So that's how I would plan out those trades. But of course, you can plan it all, and if it fails, you still gotta take your $2 per share loss. Yeah, but like that, I'll look at the chart and see if there's potential profit upside to take those trades. I think it'll be even better if it's a stock candidate that's breaking out through new all-time highs. Then you technically don't have a ceiling to go to. Then those will be like even better kinds of trades. For example, when Nvidia broke out in June, end of May this year, through all-time highs, I also took that swing trade, and at the time I really didn't know where the stock could go. So at that point, then if a stock doesn't have any resistance to go to and be just all the clear blue sky, then I'll trail it with Fibonacci retracements. Fibonacci extensions to see the potential price target. Or I'll just use I use the 8 EMA indicator on the daily chart. I'll use that to trail my winners, hopefully.
I'm not sure. Do you happen to have the charts on your desktop where you are right now? Maybe you could share it. I'm not sure if that's available on your end.
Nice. Okay. So, okay, funny what at Till. So Till, this is the example of I don't trade this setup. Well, I do, but I don't swing trade it. Like, the first red day setup, like, for example, the small cap traders who trade like once or twice a year, they'll go in short. On the first day, it turns red, or second day. Like, again, I don't do that setup. And then they'll ride it for a swing trade to the downside. You can see this stock came from like $10 and went to like $90 in 2 weeks or something. But for the kind of trade I like, disclosure, I'm already in. But for example, like you can see when Palantir broke out. Oh yeah, so this is the weekly chart on Palantir. So when it broke out of that range, it's $33 this year. This is in September of this year. You can see this is also like a multi-year breakout, because the last time the stock was at this level was in 2021. So when it's a multi-year breakout, well, when I say multi-month breakout, and also with a catalyst, then I'll get in on the first day or second day of the breakout. I got in here on the first day, and I'll try to ride it along the breakout, because technically you don't have a lot of ceiling until all the way to $40, right? Until like today. So that's the kind of swing trade I like to take, especially when there's a gap up. I call it the gap up continuation swing trade. There's many different names. So that's the kind of trade I like. Another one we talked about earlier, like Nvidia. So this is a similar one where you gapped up in at the end of May here after earnings, and you can see ever since that gap, the stock just kept on going. So then I'll get in on either first day or second day of the gap up. I believe I got in on second day, and then I rode it all the way to. I don't think I rode it all the way to 140. I think I got to as close to like 129. But my entry at the time was 103. This is like after split. Like before split, it was over like $1,000 or something. But yeah, this would be the kind of stock, like a swing trade I'll take.
So when you take swing trades, do you base your entry on the daily time frame, or would you go down to a lower time frame to kind of fine tune time your entry there?
To be honest, I'll look at the intraday chart. But as long as the daily looks good, it really doesn't matter whether I enter at 101 or 104. Not that much. Usually what I do is I like to make sure I am entering in the middle of the day. So because stocks are more volatile in the first 2 hours, if I enter in the middle of the day, you tend to enter on consolidation or pullbacks. So that's I guess in that way I'm getting in a little bit cheaper. Yeah.
Yeah. I actually, like this setup that you share. I myself, go about looking for such setups. But I think one of my struggles is that there's so many thousand stocks out there, and I haven't yet developed a scanner to help me scan such, setups like, for example, a stock drop 80% from the highs, it goes to a range for 6 months to a year, and then it breaks out. I love to trade this setup. So how do you go about, finding such setups? Yeah.
Yeah. Actually, the way to find this A plus setup that I trade is very easy because if you notice like Nvidia and also the Palantir example we just talked about, the first day there's always a huge gap up. So as long as you're able to scan for a gap up, then also historical gap ups in which my scanner is able to do, then you are able to find this setup. Like most of my setup, I would say is it's not basic, but it's easy to identify. I think that's something, for people who are watching this, you want setups that are, I'm not saying they're easy to trade, but they need to be easy to identify for you to really easily, within 30 seconds, like I can look at this daily chart and tell you whether this is a trade I would want to take or not. As long as it's a gap up above recent resistance, and again, like adding in the catalyst that we talked about, earnings, blah, 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 like the one for Nvidia, that's afterwards. But the chart, scanning for the stock chart itself is extremely simple. You just scan for a gap up with really, really high volume.
Okay, got it. So gap is actually one of your main criteria, like gap of X%.
Yes. So the way I scan for this kind of setup is I scan for stocks that are above $1 billion market cap, because I don't swing trade smaller cap stocks. And then it needs to have daily dollar volume. Like the gap up needs to have at least $1 million volume, because if there's no money in the stock, like trading the stock, then it's useless. Like it's not gonna go. And then the percentage gap needs to be at least 3% on the day, which for larger cap stocks, that's pretty, when they go, they can do like 3 to 5% or even 10% on the day.
So this gap up, is it done? Are you referring to the pre-market gap, or is it for the stock that has already gapped the previous day?
That's a very good question. So it needs to be a pre-market gap. Yeah.
Okay.
Yeah, I think that's the best time to scan for stocks. Actually, I think the way I trade, whether it's day trading or swing trading, I always find my opportunities pre-market, or at least the first 2 hours of the day. If you like, sometimes I wake up late. The first 2 hours is still fine, because like all my swing trades are found during the first 2 hours or pre-market, and then I'll enter during the middle of the day after 11 a.m. market time.
Okay. And let's say you got an entry, then where do you usually typically set your stops for a swing trade?
Yeah, so in the first couple of days after I've entered the trade, I'm very like for example, like another example I took is Neo. So I entered on this first day of the gap. This stock gapped up because of the stimulus package in China. So I thought that was really good catalyst. But you can see like after I think I got in like 590 that day. You can see after I got in, no, it went down for 2 days. So in that at that point, I will put really wide risk. It needs to be convincingly break down the low of the first day. So it's here, just call it 560 here. Now the reason I didn't get stopped out is because this candle it never closed below that 560 mark. So I never got stopped out. If it closed below it, I would have had to stop out. So my stop out when I do take losses is usually near the end of the day when the candle and the market condition is just very clear that the stock is going to close below 560. Then I'll stop out. So the first couple of days, I'm not going to say nervous, but if I take losses, it's usually within the first 3 days. That's how my losses are cut really quickly. So, so let's say I do take a loss, it's going to be 560 or 550 with slippage in the first week. But when it starts working, like right now I've been in the stock for 2 weeks now. When it starts working, I just leave it alone. Then it's very much stress-free because what's going to happen at this point? It's already at 680. Like, if I stop out, I might stop out below like 620. I'll still be in the money. So the most stressful or nerve-wracking part is in the first week. And after that, that's the beauty with swing trading. After that, I just let it go, let it do its thing.
Right. Gotcha. So from what I'm seeing is that usually when a stock breaks out, more often than not, there's a piece of news to justify the breakout.
Oh, yeah.
Am I right? I mean, it's like even there's no news, I think the news outlet will find a piece of news to justify that price movement.
Yeah, I guess so. Yeah.
And if that's the case, then how do you kind of ask yourself, is this so-called catalyst that's being out there, is this something that is worth putting extra money on for this trade? How do you know what catalysts are A+ catalysts and what are just noise catalysts?
I think both from like the news sources that the traders are using, like hopefully they are good news sources in the first place. So there's a lot of like free websites online that allows you to find news sources. The problem is that they include all the sources, all the news. So it's not quality news source. Like the traders really have to do a lot more work to go in and shift through what's BS or not. But hopefully the traders use really quality news source that are legitimate. So you need to do, I guess, less time and work in kind of shift through the BS. But yeah, so that's number one. The number two is just experience. I've been kind of doing this kind of trading, like in terms of reading the news and finding a bias and determining which direction it could go. I've been doing this for at least 6 years. So I've read all sorts of news. I kind of have a good idea what's BS and what is not, and what kind of news the market tends to care more about. I'll give some examples. For example, like earnings beat cannot just be any earnings beat. You need to beat your expectations by at least over 20% of the surprise. I call that a surprise ratio. It needs to be at least over 20%. If the beat is in line, then you're not going to get a huge move. So that's number one. And then also guidance. Guidance needs to be a huge beat of at least 20, 30%. Anything less than that, the stock is not going to go. Other things like upgrades. Upgrades need to be from specific institutions that the market cares about. Like you have the Bank of America. You also have your crappy institutions like H.C. Wainwright, and no one cares about them. So it's just about knowing what news the market cares about, and that has driven the stock prices up or down in the last couple of years.
Right. Okay.
Yeah.
And is there, let's talk about the trading industry generally. Do you see any significant changes, or what significant changes have you seen in the industry over the years?
I would say that after being in the trading space and I guess also being in the social media space, I definitely seen, I guess, the interest or whatever is the hottest thing for new traders to learn tends to change a lot. And and sometimes it's not for the better. Um like back in back, maybe 10 years ago, there was less, I guess there's forex trading, but there wasn't that much emphasis on like cryptos or like prop firms or challenges, like stuff like that. So I think nowadays it's easy to sell those things like, oh, prop firm challenge. You can sign up for with $200 and get, I don't know, 50K buying power. But most of that, like, I wouldn't say scams. They just make it very difficult for traders to pass. So that's the reason I don't ever plan on working with prop firms. I just think the entire business model is only makes money if a trader fails. So, and that's the hot thing nowadays on social media. Everyone wants to get funded. They want to know the shortcut to pass the challenge, but they don't realize even after you pass, you have to play within the rules to keep on trading their capital. So I that's the reason I never want to talk about funded challenge or prop firms, because I'm sure some people can make money from it, but I don't believe that's in the best interest of all in the general trader. Even though that's hot and trending, that's what people care about. I'm not gonna talk about it because I personally wouldn't want to spend $200 to take challenges that are so difficult that I'm probably gonna fail and not learn a thing from trading.
Yeah. I was actually just sharing on one of my YouTube videos saying that you can be a profitable trader, but it doesn't mean that you're going to pass the challenge because the criteria is just so
Mhm.
strict, right? so
Yeah.
so yeah, and you're right that they actually make money from traders failing the challenge. In fact, I think they pretty much say it's just a sim account. They put it up front on their website. You don't get to trade a live account, it's a sim account, and if you are good, maybe they might put some capital behind your trades and trade it on their own private account. But again, they won't tell you whether they'll do that or not. So it's a bit gray down there, yeah.
Yeah. Like I can see the appeal because you're not risking your own money, but I do think your upside's capped as well because unless you're trading a real account, like in a simulated trading account, like there's a lot of things they can do on the back end, right, to stop you from making money.
Yes. So my next question was actually, is trading something you plan to do for the foreseeable future, or do you plan to shift to something longer term? But I think, based on your sharing, you're probably kind of like making the transition to swing trading and something longer term. Did I get that right?
Yeah, I think I love trading, so I don't think I'll ever stop trading. But I do want to trade less. Whether that means, just really a few very good trades a year or a few very good swing trades. I'm open to both day trading and swing trading, but I just don't want to have to trade every single day now. And I do find that I'm more at peace and I feel less stressed out, and I can appreciate other people around me more when I'm not like looking at trading every single second of the day.
I listened to one of your podcast episodes and you said that you're quite trading does affect your mood, right? Especially when maybe trades are not working out, you're an angry person. I heard you smashing keyboards.
Oh my God,
So
yeah.
how has that changed for you over the years? I think it's getting better now.
Oh yeah, yeah, a lot better. Um, yeah, I've been trading. I was unprofitable for the first 2.5 years. So that was more than 10 years ago. Definitely back then, I was in my early 20s, a lot more hot-headed than I am now. I like to say nowadays I'm a little bit more chill. Like, like you lose money, you make money. I feel like people around me nowadays cannot really tell if I am up on the day or down on the day. Not because I'm purposely trying to hide it. It's just I've traded long enough to know that one green day or one red day is not gonna make a huge difference. in terms of my trading career or performance. So yeah, I think that's how you kind of zoom out and you realize that any single trade or any single day is very insignificant. Um, so that's how you can like let go a lot of like the stress and anger, I think.
Yes. So now maybe let's move on and talk about your entrepreneurship journey, because I think recently you started this company stocks.io, which is actually a stock scanner, right? So how did that come about?
Yeah. So I met the co-founder who is the founder of Spiky. That's a back testing software for a lot of for stock trading. So I met him a while ago, I think at a trader conference, and we just kind of kept in touch. And he reached out wanting to do something together. Whether we thought about starting a trading journal, but that's not really something I want to do. Then I was like, okay, well, scanner is something I actually will want to see. A better scanner that are better designed and easier for people to use. Because previously I've used a lot of like kind of legacy scanners out there. They're extremely clunky, sorry, hard to use and very like you feel like you're opening like a Windows 2000 software. So so I was like, okay, I think we can do something better. And I kind of incorporated everything in terms of my strategies, how I trade, my process, essentially the way I prepare for my trades, like we talked about earlier, scanning for the stocks and reading the news, gappers, alerts. Like I'm putting everything, my entire process into one software, which is the scanner, stocks.io. So essentially, I'm building it for myself as well. Like I want a tool where every morning I only open one window and that's it. I don't have to open like 10 other softwares to do 10 other processes and research. So yeah, that's where we are. We've been operating the scanner and still developing it for the last 5 months or so. That since we've been live, and the feedback has been really good.
So what's the like I don't know, the process like? So your co-founder is the one doing the development work, and you're the one, I'm guessing, doing the marketing work. Is that the arrangement?
Yeah, so he himself and I think there's two other engineers who work with him. They build everything on the tech side. So that includes sourcing market data, building the interface, integrating AI into it. They do all the back end, and I create educational videos teaching people how to use it, and yes, also the marketing as well. Because I think there's a lot of great softwares out there, but they don't do a good job teaching users how to use the product or maximize the reach, maximize the functions of a product. So that's where I come in. Yes, I bring awareness. I tell people about stocks.io, the scanner, how I personally use it, so I can teach them how to trade. At the same time, teach them how to use the software and why they should use it, or how they can do the same thing, potentially with free softwares, how they would go about doing that.
And then how's the gonna be like the startup capital? Like, do you put in like X dollars, both of you put in X dollars, then from the money you guys use up to pay for all these engineers, the cost to start everything?
Oh yeah, yeah. I think it's a besides trading, I do a lot of investments on the side. Obviously, I don't want all my money to be in my trading account. That's a bad idea. So I just see this as another investment to diversify what I'm doing. So yeah, we both put some money in. He put a little bit more, because technically he's a majority shareholder. He put a little bit more, and nowadays, like we're not profitable in terms of like what, neither of us are taking money out from the scanner. We're just reinvesting all the profits back into the business. We're hiring more engineers. We're buying more data sources for more market data, more efficient market data. We're buying, live charting. We're buying live scanners, live alerts, integrating AI bots, stuff like that. So yeah, technically, I haven't seen a single dollar, but that's okay because we're having a lot of fun building it. And, I can see it grow exponentially in the next few months or a few years.
I love what you're doing, man. I really, and envious right of this because I think to grow a company, it can't just be one person, carrying the helm, because like for your case, you shared someone has to be developing the product,
Yeah.
marketing. It's all different skill set, and one person is just not possible. So I'm so happy to see that you're doing something that you love, you're putting your skill set to use, and yeah, really exciting times ahead, right? Well done.
Yeah, thank you. And Rayner, I'm sure you can do the same too. Like, with the reach you have on YouTube, I'm sure you get a lot of inquiries from people with like ideas they're proposing to you. I think it's just about selecting what's right for you, what kind of journey you want to take.
Yeah, you're right. I think one of my struggles is that I don't attend much of this physical conference, and I do have a lot of offers that come to my inbox, but there are a lot of just scam nonsense bullshit. I'm not even going to spend time replying to. Yeah, but so I find that maybe the more legitimate opportunities is where I really have to go out there, meet traders, right? And that's where I think the magic happen. I'm not sure. What are your thoughts on that?
I think both. I guess both online and in person would work. Like, yeah, you're right. My email is usually like flooded with a lot of BS, like proposals or like pumping the stock. But I would say every 100 email, you have one or two that sounds like a legit idea. Then it's worth exploring.
And what's
Yeah.
you? Yeah, since we're on this topic, what's your then? Let's say someone sends you an email and you think that idea is worth exploring. What would your next step be to that email?
Yeah, I think ask them to send you like a proposal of what they plan to do, their business idea, or even better yet, like if they've done a similar business or other businesses in the past and show you and to prove to you that they are legit, right? Because they need to bring something to the table. So in the case of my co-founder for Stocks.io, he can very easily show me that, hey, I built Spiky. This is the back testing software, and I already knew I use a product myself. So I know it's a good product. So that's why it wasn't difficult for us or for me to decide to work with him. So yeah, I think that's where you can start. Just definitely ask them to provide you more research or show you their past work.
All right, thank you.
Yeah.
So, what's your marketing strategy then to promote this tool, stocks.io?
I think right now we're still in the very early stages in which, yeah, it's just me showing people how I use a scanner. But I think eventually I have a lot of good relationships with other trading influencers, quote unquote trading influencers. Like I definitely want to get their feedback on Stocks.io and see if they are open to promoting the product themselves on their channels. Maybe other affiliate programs or like sponsorships, right? It's a full circle. Like I've been affiliates and promoted other people's products before. I know how it works. I know what the sponsorship deals are like. So it's time for me to do the same and work with other creators out there.
Right. Okay. And in the midst of like developing this product, since I think you say it's live for the last 5 months, what are some of the struggles or challenges that you have faced so far?
Yeah, a lot of challenges. Number one is the cost. Engineers are not cheap, and the good ones are not cheap, and rightfully so. But I think definitely the cost has been difficult. Like we're hiring more and more people, so every month we're pretty much just break even. We're a little bit red, and that's okay. But I think that's been the toughest part because our product is technically very, very cheap. Most of the competitors out there, they're selling a subscription monthly for like $130 to $190. We're selling ours for $70 per month. Annual is only $600. So that's extremely cheap, and we want to try to keep it that way. But that's where the challenge comes because like data sources are expensive. Like I think we spend $8,000 a month just for like a single live market data source, and the engineers is like obviously a lot more. So I think the cost has definitely been the most difficult part. The others is just like it's only been 5 months. We have a lot more we want to do. The product is not where I want it to be yet. I'm still slowly working on that, but that's just the part that will take time and money. Yeah.
I'm trying to maybe play a like devil's advocate here because I'm just trying to think, what if let's say touch wood, right? Things don't work out the way they expect. At what point would you think to yourself or say to yourself, hey, I think things are not working out. Let's kind of like, stop it, right? Is there like any line that you've drawn for yourself when that happens?
Yeah, I think it'll be clear. For example, like if our customers hate it, if everyone's canceling, or we're getting zero signups, then that's a very easy sign to see that, oh, like maybe this is not an idea that people love or want. But if people are still signing up for it every single day, and I'm still getting the emails, like I personally respond to all the support emails because we're really trying to keep a small team. I personally talk to the users. I see their problems. I help them solve it. But I also see the emails where they're saying, "Oh, this is great. Thank you so much for allowing us to do all these things like news charting and scanning all in one place." And so I know there's a lot of positive feedback there. I also know we're not perfect yet, but that's where like I'm very motivated to keep working on it. So unless we see zero users, zero sales, and a lot of negative feedback, I don't think we'll stop.
And I'd like to hear how is it differentiate from, like you mentioned, those other scanners that are charging like $200 a month, and then they're like from the previous Windows era, then how are they still commanding that kind of price point when they seem so backdated?
I
It's
think
just
I think the competition hasn't, like, if you look up the scanners, there's really like three big ones that people know. And they can charge that because they all charge that, I would say. But I would say though, I think they need to do that because, like I said, like at $70 a month, like we're barely like breaking even. So for them, I think it makes sense that they charge it at 130. It's just a lot of money, but they need to make the margin work, right? So at least they're probably we're operating at like less than 5% margin. They're probably doing at least 20% margin, and that's great. That's how a business functions and survives. If they want to be profitable, we're just at the point where in the very beginning stages where we don't really care about profitability or like paying ourselves. So that's how we can make it work at $70 per month.
yeah. So I think it's more of like right now it's getting the right product market fit. Once it's correct, then we can scale it up right to thousands of millions of people around the world. Yeah.
Yeah.
So are there any other products or services that you think that this industry could use right now?
That's a good question.
Yeah.
I want to say like a better back testing tool.
Is there for like any particular market or for all markets? Because from what I know,
I'm
like
only
usually like
familiar with stocks.
okay. Because I know Forex they have their
Yeah.
own backtesting tool, but I think it's very poor. And stocks, the only backtesting tool that I think most people know is the trading view backtesting one, but I think that's not very accurate
Yeah,
as
it's
well.
not pretty easy to use.
So that's a good point. Yeah, backtesting tool.
Yeah, maybe.
So would the
Yeah.
backtesting tool be something that's fast free? Because those backtesting tool that I know is like Army Broker, for example. You need a programmer to do the code for you, and it's a lot of learning curve involved, right? So might it be a backtesting tool that something that a few clicks of a button you can get the results?
I guess so. Yeah, I'm not an engineer myself, so I don't really know. But yeah, if I think about it, there's already a lot of journaling software, so that's definitely not something we're missing.
Yeah. And by the way, just when you mentioned journaling, just my opinion, I think journaling is one of the hardest money to make money. I'm glad you didn't go into it because I find that traders, they are not a fan of journaling. They hear the word journaling, their mind just switch off. Fuck, I don't want journal, man. I want to just make the money. I just want to charts. Like, give me the technical analysis, not the journal. So I find that people who create journal too, I really respect what they're doing, but the market is it's not a sexy thing for the majority who are involved in the markets.
Yeah, I would say you'd be surprised though. Like Tradezilla,
Gosh,
the journaling software.
It-
But anyways, they're doing like really
okay.
well, even though it's a really technically, like, yeah, it's not sexy. It's kind of boring-ish, but they're doing really well. Like their product, I think like it's like $30 a month or something, but they're doing really well.
Okay, then maybe that's where I could be
Yeah.
wrong, right? Maybe because I come across a lot of traders who are more of like the FX industry and the trade journaling, something like the turn off for them. But yeah, I could be wrong. Maybe different, different markets have different people of different preference. Yeah.
Mhm.
So what are some of your failures, right? And you like to share, and what do you learn from it?
My failures, like for trading
I think you can
or
open up to trading, YouTube, entrepreneurship, anything that comes to mind.
I think, huh?
It's okay, I can go first, right? While you think about it. So for me, I would like maybe
Sure.
like to
Yeah.
share that. I think in COVID, I won't call it a failure, but one thing that happened to me during COVID is that I got complacent because in COVID, everybody is online watching videos. Sales is good. I mean, from the business standpoint, and I just refuse to quote unquote level up. I mean, after all, things are working. Why do I need to do webinars and stuff like that? And then I realized that my competitors who does webinars to offer their product offering, they do even way more, right, compared to what I was doing. And that's where I realized, well, man, I really left quite a bit of money on the table. So looking back right now, I felt that, when things are good, you still shouldn't be complacent because you just, I mean, it's a never ending lifelong learning journey, right? And usually when things are good, people tend to be more proud, what can go wrong. But then looking back right now, I felt that really, cost me quite a bit of money looking back right now. Yeah.
Yeah, I guess I can see that. You're talking about like for like webinars for the programs and stuff, right?
Yeah, I
Uh,
for the longest time, I haven't been doing webinars. I just kind of like from emails, we offer our products, right? And then it's only recent years
mm,
that I start incorporating webinars because, it's better conversion, right? And the people kind of like trust you more because they can actually hear you as a person compared to email, just text and a lot more cold. Yeah. So webinars, does work for me.
mm. Oh, okay. Interesting. Yeah, I guess for me, my failure is like I wish I had partnered up with someone for a lot of my business ventures, even if it's just YouTube. I think I definitely spread myself too thin starting in 2020. And back then I was a lot younger. Like back then I'm able to like work 10 hours a day, including weekends, and still be able to function fine. But I think in the last 2 years, I kind of realized that, hey, I can't, I'm not in my early 20s anymore. I can't do that anymore. I kind of want a life. That's where, yeah, I wish I partnered up with someone. Not just, it's not even for monetary reasons. Like, sure, maybe could have made more money that way from everything, like YouTube, trading, everything. But I think just like, I think I would have gotten a lot more peace, like mental, like I've been like, very stressed out mentally the last 2 years. And I feel like, I don't know, looking back now in 2024, I don't know if all that was worth it. I feel like a lot of that could have been relieved if I had a partner working on, let's say, even just help me with YouTube or, help me run my community so I can focus on my trading. I definitely felt like was spread too thin. Like I was trying to invest in new companies. I do like some startup investing and help them promote the product. I was doing that. I was doing YouTube. I was doing my own trading. Like, yes, I still do my own trading. And then like I have my community. Like I felt like I was wearing like 4 different hats and I'm one person doing everything. So I think I could have done a lot better there. Yeah.
And how are things now? Have you like, got in the right people for this, some of these roles that you're currently doing?
Well, I think like now hindsight 2020, nowadays I'm still kind of mostly by myself. Like stocks.io, I learned that lesson, so I partnered up with someone. So I'm not really, I'm working hard for it, yes, but I'm not like grinding like 10, 12 hours a day for it, but a lot of my other endeavors, like for example YouTube, I'm still gonna post on YouTube videos, but I'm not gonna be as aggressive as I did last couple years. Like I mostly, like what we were saying earlier, I kind of want to just post when I have something that I really want to share, and I think it's really educational for the audience. So podcasts, I still want to do that, but like it's not sustainable to do podcasts every single week. Like there's just no way I can fly that much. So maybe it becomes 1 video a month or 2 videos a month. Like that's just the way it has to be. And I'm happy to do that now. Like, I don't feel like I have to do, I don't feel like I have to run at 120% for every single thing. I think I'm okay taking a small step back and focus on like my own trading and have a life for once. Like, I'm gonna get married next year. And yeah,
Congratulations! Ooh, I'm
thank
not sure if any
you.
of the people listening knows about this, but yeah, congratulations. I know you're attached, but yeah, marriage, wow. I'm happy for you.
Yeah,
It's a huge milestone, by the way.
I know. Same.
And
Like,
when the kids come out, it's like, that's it, that's it. Whatever you want to achieve, right? Do it before the kids come out, because that's where you realize your 24 hours a day is kind of like cut into half. Maybe even.
yeah, that's what I heard.
So yeah.
But yeah, that's the reason. Like, I'm trying to really think about what I want to do, and to put like dedicate hours for that. But I need a life outside of trading and work and social media, right?
Yeah, good point, right? I think I have a lot of takeaway as well, because oh gosh, try to do everything by yourself because you can save costs, but end up you get burnout, right? And it's just not fair to people around
Yeah.
you. So yeah, thank you for the reminder, because I am guilty of it myself. So
Yeah.
so in closing, right? So right now, how do you kind of like juggle between so many hats? You have your content creation, you have trading, you have your entrepreneurship stuff that's going on. How do you manage all this?
Yeah. I can share how I manage it, but I don't think it's the best way. But I think it's just what's been working for me. So I allocate that 5 days a week. I allocate each day to something specific outside of trading. Like trading, I pretty much will still kind of stare at the market. Even if I don't trade, I'll still kind of look at the market every morning. And that's just by habits. Like, that's fine. I enjoy doing that. So every day I'll still look at the market, even if I don't trade. And then after the morning session, so after about like 12 p.m. market time, which is my 9 a.m., that's when I start wearing the other hats. So let's say Monday, Tuesday, I dedicate to YouTube. Wednesday, Thursday, I dedicate to stocks. And Fridays, I dedicate to something else. That's kind of how I allocate by the whole day, essentially. Yeah.
Okay. Because I
Yeah.
also I wanted to share mine, but mine's quite lame. Like Monday to Sunday, I have to dedicate to the kids, and that's pretty much it. Whatever time I'm left is okay. I'll squeeze in a little bit of YouTube. I'll squeeze in whatever I can
Yeah.
find. Yeah, yeah. So
That's fine too. Yeah.
so yeah. I wanted to ask this as well. So earlier we talked about your failures, right? So what are some of your successes then, looking back now, and what do you learn from it?
I would like honestly just I think the biggest flex. Well, biggest flex. I think it's a flex, but like honestly, the biggest success is just myself learning to trade in the first place. Like, I was already trading full time before I even started YouTube. So I feel like just that in itself, I'm really proud because not a lot of people can say that. And sure, YouTube came after that. I'm very, very happy and grateful for the growth on YouTube as well. Even though it's cost me a lot, I would say social media cost me more stress and anxiety than trading ever did. But I think it's worth it overall. Um, I guess other success, I guess I helped my parents retire a couple years ago. So they were they were all both working in Taiwan, and in 2021, that's when I was like, okay, mom and dad, like you should, like, in 6 months, how about you retire? I'll take care of you. So they are able to spend 6 months of the year in Vancouver, where I am. Like, I have a place for them to live, everything's taken care of. It's not like they don't have like Lamborghinis or anything, but they're comfortable. They're comfortable here. And I think that's something I'm extremely proud about.
So 6 months they'll be with you in Vancouver, and 6 months they go back to Taiwan.
Yeah, because they don't like the winters here.
Ah, okay.
Yeah. So, yeah.
Uh, how did you get started on YouTube?
So before becoming a trader full time, I had a quote unquote real job. And that real job, I was working in film and VFX in LA at the time. So I've always been working in film production for a long time. So after I started, started trading full time, and my style of trading, which we can talk about more later, but I usually like local time here on the West Coast, I'll trade from 5 a.m. to about like 9:30, 10 o'clock, my local time. So that leaves me with a huge chunk of time from 10 to 1 p.m. market close, to do kind of like explore other projects. And I knew I didn't want to trade all day because I would give back a lot of my profits and overtrade. So YouTube kind of started as like a side project. Like I used to do like fun animations on my YouTube channel. And then I used to do like faceless film and video about trading, just reviewing stocks I traded for the day. So that's kind of where it started, like as a distraction from trading. So it's a way for me to manage my risk so I don't lose too much money in trading.
Can I
That's
hear
back
you?
in 2019, was when I first started the channel. Yeah.
So when you first started your channel, right? What were some of the challenges you faced in your early days?
Honestly, in the early days with the YouTube channel, there wasn't that many challenges. I don't think. I think with YouTube, it's almost like the opposite of trading. Trading, you face so much challenges in the first 2 3 years. YouTube, or social media in general, you like no one's really watching you in the beginning, right? So you can almost do whatever you want, like whatever content you want. You don't have that many eyeballs on you, less pressure, less stress. And the comments are generally very extremely positive when you first start because people love underdogs, right? They want to see like a blossoming trader, starting a YouTube channel with like 100 subscribers. So I would say like in the beginning, like 2019, 2020, before the pandemic started, everything was extremely easy. I did it very, very casually on the side. So yeah, it started out very, very easy. And then I think as the channel grew, especially with of course with everything during what happened during pandemic, yes, I'm really grateful for all the growth and all the followers, but it's definitely gotten a lot more challenging when you have so much eyeballs on you.
So, what's your strategy when it comes to creating YouTube videos today?
Um, I think it changes all the time, but generally I get the video topic ideas from my comment section. Like I'll see what people are asking about, and I'll piece together all the similar comments and the questions and create a video for that. But it has to be based on, like, the basis has to be based on how I trade. So I get a lot of people saying that, oh, my videos are repetitive. Yes, because that's how I trade. Like I'm not gonna change my strategies to invent new things to teach. I'm only gonna teach and create videos on my existing strategies. So of course it's gonna get repetitive, but that just means I'm actually like practicing what I preach.
Yeah. So yeah, thanks for the insight because I myself I used to I'm no shame in mentioning this, right? But I actually always see what videos my competitors are creating. I see what the
Hmm.
popular videos, and then I will create videos of similar topic, but again based on my own experience, and which is
Yeah,
what
yeah.
and I guess where some of the feedback that I'm going to digress a little bit here, but I think it's beneficial for the people who are listening to why we create content which are repetitive in nature is because our trading style or my trading style, it's just this nature. If you want me to talk about, let's say, other concepts that, Elliott Wave, smart money concepts and things like that, I can talk about it, but I've not used it and traded in my own account. Why would I want to teach you something that I've not put
Exactly.
money where my mouth is and then I teach you on it? And it kind of like, it's just, I feel that, it doesn't feel authentic, right? So this is why we do it, and this
Mhm.
is why you find that our content is repetitive. That's the main reason why. Yeah. So yeah, that was just kind of like a point that you mentioned and
Yeah.
hit me as well.
Yeah. And I think the viewers, I mean, they're not going to listen, but people need to know that in trading, you don't become better by trying to learn everything. You really need to pick one or two things and like really become better at it. That's how you succeed in trading. You don't jump from crypto to forex to stocks to futures the next day. Like that's just not how people trade.
Yep. And yeah. So back to YouTube. Do you find that it's harder to stand out on YouTube today?
Um, I guess a little bit. I guess because there's a lot of trading channels now. But I don't. To be honest, I don't mind that. I think it's good that there's, I guess, quote unquote, more competition. But that just means that the viewers has more choice. And okay, it's gonna sound weird coming from me, but I don't like being the center of attention that much. So I don't mind that, technically there's less people looking at my content. Like, it's fine. Like, only the real ones are staying. So I don't mind if I never get to like a certain number of subscribers.
I think that's a bit hard for you because number one, you're in a niche where it's male dominated, and number two,
Yeah.
you're a female, right? And I find
Yeah.
that so that kind of give you, in my point of view, a lot of edge, right? Because I mean, guys, right, we are just naturally wired to look more at females rather than male, especially if the females, decent looking like yourself. So this is why I find that there's an edge for you down there, and it's a bit hard to shun away from the attention, given that you're in such a sweet spot. My point of view. Yeah.
Yeah, I guess so. Yeah.
And what do you think many people get wrong when it comes to YouTube?
When it comes to YouTube,
Yeah.
what do people get wrong?
Yeah, like for example,
I think, I think just the part that people like often they miss all the effort you put on the back end, right? Like in the production. Like, for example, like the podcast that we were just talking about earlier, they take so much time and coordination to make happen with the guests. And I travel to a lot of my guests, so they cost a lot of money to produce. So it's not like for each of the videos where I have to travel to interview people, like I technically those videos I'm like always down like couple $1,000s per video. And I don't mind as long as overall the channel is technically like sustainable itself. I don't mind if I don't really end up making that much money from YouTube, the YouTube by itself. But I think it's only when people don't understand they start speculating like, oh, these guests, they must have paid money to be on the show. She must have taken her those sponsorship money in order to produce them. Like, look, I've never gotten a guest who paid to be on my podcast. And I don't think I'll ever do that unless absolutely necessary, where like the channel is very, very struggling. So when people say that, it's a little bit hurtful. They don't understand how much time and effort and how many people were involved to make the podcast happen. So that's the part I think people get very wrong about YouTube, or just YouTubers in general.
so maybe you could just give an audience an idea of what it takes to create an episode for your podcast, so they have a good idea, right? What it takes.
Oh yeah. So well, it starts with contacting the guests. So we usually start doing that like 3 months in advance. And if the guest said yes, then you start the process of, okay, like 2 months later on this date, we'll fly in. If that works for him or her, then we start looking at studio spaces to book. Then we start booking flights and hotels for not just myself, but 2 other team members, sometimes more, sometimes less. Yeah. So I think, like, for example, like when we went to New York last year, we filmed with 5 people there. So that was great. But we were there for a week. So New York hotels per person per room, it's not exactly cheap, right? They were talking about at least $500 to $600 per night per person. So if you do the math, we're there for 5 nights. We filmed, share a lot of content, but I mean, like those were definitely like break even or lose a lot of money. And again, I don't mind that as long as people enjoy those podcasts. But I don't. It gets me so upset when people say, "Oh, these podcasts are clearly sponsored or like paid for," when that's just not the case.
And what's your approach to conducting a podcast interview? Is there like a certain structure that you follow when you interview your guests?
To be honest, not really. like I'll do some research on the guests beforehand. Of course, I watch their previous podcast, read on their social media profile if they have one. So just to get an idea, general idea of how they trade. But I don't want to know too much about them because I want to save a lot of free flowing conversation when I'm actually filming with them. So it's almost like, so I want, the goal is to have my viewers watch the video feeling like they're just part of this conversation, as they're just meeting the guests for the first time with me. So I don't want there to be too much scripting or too much prepped. That's fine. Where I find usually, especially when I talk to traders, even if it's our first time meeting, once you get into the details of how they trade or why they're trading, what got them started, the conversation just flows by itself. So I really, really enjoy that. And truthfully, like the podcasts, I enjoy filming those the most. Even though they're the most expensive to produce, I love those the most.
I love what you said on one of the podcasts I listened to you on. You said that it feeds your curiosity. So it's actually a win for you as well. So it's not just,
Yes.
for the views on YouTube, but
Yeah.
it's for you as well.
It's a win-win-win for everyone. That's how I want our audience to feel as well. They're learning with me.
Yep. And
Yeah.
one last question on YouTube before we move on to trading, right? So if you were to start a YouTube channel from scratch, maybe some people listening right now, man, I want to be like Shay, or like, start a YouTube channel as well. How would you go about it?
Oh man, I'm not sure. Just because the way I started and everything was just for fun. Like it started because I was having fun. So nowadays, I would say you definitely should make a content about something you're very passionate about. Don't make content about something just because it's potentially gonna make you money. I think that's the best way to go about it. I started talking about trading because that's what I was doing, and I thought it was really funny to, like, I used to have these like stupid trading jokes because those were the jokes I think of when I was like after a trading day. I'm like walking around outside, like, oh, that would be really funny if I said this or that. So yeah, it just needs to be something you're actually passionate about because people always think YouTubers make a lot of money, and in the past you could. Nowadays, I think unless you're doing sponsorship videos every single time, you're not gonna make that much substantial money, even with 1 million followers. So you always have to start with, what are you passionate about, what do you enjoy talking about, and start from there. It needs to be something you're actually enjoying and actually interested in talking about.
When you mentioned the jokes, right? What came to my mind was your microphone that has a Lamborghini attached to it. I love that so much. That's hilarious. That is like that is hilarious.
Yeah, it's like that. For example, when I did that myself, I was like, oh, this is the stupidest thing, but I'm gonna do it anyways.
That is like in the face to those, traders that's always flashing their Lambo and life. Like, oh my goodness, I love that one. How do you get that, fit the microphone with the toy together?
Oh, you can buy the toy on Amazon for like $20, and you just use a double-sided tape
Right,
and you stick it
okay.
on the mic.
Entrepreneurship at its finest, right?
That's
Just figure
it.
things out with
Yeah.
whatever resources you have. Okay, I thought that, like you got someone to, fit it nicely, but yeah, okay, double-sided tape. I got it.
Just DIY.
So is there anything that, you wish to add or talk about that you didn't have a chance earlier?
um, I guess I mostly want to like encourage people watching this, like whether you are trading forex, futures, stocks, crypto. I think there's many different ways to make money in the market, but I think you can only make money once you find out what that specific path or strategy or setup is for you. You're not gonna make money by jumping in, hopping on different trends every other week. I think that's the key lesson here. And also, be nice to people on social media. For example, Rayner, you done been doing YouTube for even longer than I have, right? You put out so much educational content. I think I think people, hopefully your viewers understand that you put in so much work into it. Like, it's not like we go to AI and ask them for generate a video and post it and get like hundreds of thousands of views. It's not that easy. So I just hope people realize how much work you put in, and also realize that, hey, like, in order to succeed in trading, you have to put that similar amount of work on yourself and on your own trading every day. That's how you'll see any kind of success in anything that you want to do.
Yeah, I think most people, they are generally nice, like as we mentioned. It's just that
Yeah.
small percentage of the people that are, no matter what you do, they are not nice to start with. And when your channel gets much larger, that small percentage in terms of nominal value gets larger as well. So we need to always be aware of,
Yeah.
the good side. There's always the majority that are nice. Don't let the minority kind of like ruin the experience for us. But it's easier said than done, right? So yeah, I'm glad I have you to share my struggles with, and this journey hopefully is a tad easier for both of us moving forward.
Mhm. Yeah, no worries. I mean, at the end of the day, I'm grateful for everyone who followed me or watched my videos. You know, there's no, like, I started the channel as a side project, as a hobby. I never would have imagined it to grow to the way it has today. So thank you, everyone.
And where can the viewers find and connect with you?
Yeah, they can find me on my channel, Humbled Trader, or on my website, humbletrader.com.
Yeah, I think the easiest would be just Google Humbled Trader, and all the relevant
Yeah.
social media profile, everything will just flow pretty easily. And by the way, please be aware of impersonations, right? So I believe there's
Yes.
a lot of fake profile. I think if you guys want to know which is the real account, just send the team an email. They can verify it for you quickly. Yeah. So yeah,
Mhm.
that's it for me, right? So thank you, Shay. I am so happy to have spoken with you today. You've been a very huge inspiration to me from how to run a podcast, on how I can go about investing in other companies, projects, entrepreneurship. So yeah, I really, appreciate your time. Thank you for this insightful conversation, right? I appreciate you.
Thank you, Rayner. Thank you so much for setting this up. And I know you're getting up early in the morning for this podcast in Singapore. So thank you, and thank you everyone for watching.